Bitcoin is a decentralized digital currency, often referred to as a cryptocurrency. It has become part of daily financial discussions, debates, and controversy. As I record this video, there is anticipation about the approval of spot Bitcoin exchange-traded funds or ETFs by the United States Securities and Exchange Commission. The approval of such ETFs would open the door for mainstream investors to gain exposure to Bitcoin through traditional investment channels. This development is closely monitored by the crypto community, as it could have a profound impact on the broader adoption and acceptance of Bitcoin within traditional financial markets. Some companies like MicroStrategy are already heavily invested in Bitcoins. Bitcoin was introduced in a 2008 white paper titled Bitcoin, a peer-to-peer electronic cash system, by an individual or group using the pseudonym Satoshi Nakamoto. The white paper, published on October 31, 2008, was a concise and groundbreaking document outlining the principles and mechanisms behind Bitcoin. In it, Nakamoto proposed a decentralized digital currency that could operate without the need for a central authority, such as a government or financial institution. The primary objective was to create a peer-to-peer electronic cash system that addressed the challenges associated with traditional financial systems, such as reliance on intermediaries, high transaction costs, and susceptibility to censorship. Bitcoin is built on a technology called blockchain, a decentralized and distributed ledger that records all transactions across a network of computers known as nodes. A blockchain consists of a chain of blocks, with each block containing a list of transactions. Once a block is filled with transactions, it is linked to the previous block, forming a chronological chain. This structure ensures transparency, security, and immutability of the transaction history. Here are some key and fundamental features of Bitcoin you should know about. Bitcoin's decentralized nature is a fundamental characteristic that sets it apart from traditional forms of currency and payment systems. In a decentralized network, there is no central authority, such as a government or financial institution, overseeing or controlling the currency. Instead, Bitcoin operates on a peer-to-peer network, meaning that transactions occur directly between users without the need for intermediaries. This decentralized structure contributes to increased resilience, censorship resistance, and the removal of a single point of failure. The absence of a central authority also means that no single entity can manipulate or control the supply, value, or policies of Bitcoin. This decentralized design aligns with the ethos of financial freedom, empowering individuals to have direct control over their assets without relying on a central governing body. Bitcoin's capped supply of 21 million coins is a deliberate design choice intended to create scarcity, similar to precious metals like gold. This scarcity is programmed into the Bitcoin protocol, and the issuance rate of new Bitcoins is halved approximately every 4 years through a process known as the halving. The capped supply and predictable issuance schedule are intended to prevent inflationary pressures often associated with traditional fiat currencies. The deflationary nature of Bitcoin, coupled with its fixed supply, encourages the perception of Bitcoin as a store of value. Investors may view it as a hedge against inflation, as the increasing scarcity over time may contribute to the potential appreciation of its value. Mining is the process by which transactions on the Bitcoin network are verified and added to the blockchain. Miners, individuals, or groups with powerful computers compete to solve complex mathematical problems through a proof-of-work consensus mechanism. The first miner to solve the problem adds a new block to the blockchain and is rewarded with newly created Bitcoins and transaction fees. Mining not only facilitates the creation of new Bitcoins but also plays a critical role in securing the network. The competitive nature of mining and the computational effort required make it economically infeasible for malicious actors to manipulate the transaction history, providing a robust defense against double spending and other fraudulent activities. Bitcoin transactions offer a degree of pseudonymity, as users are represented by cryptographic addresses rather than personal information. While this provides a level of privacy, it's essential to note that the transaction history of each address is stored on the public blockchain. Advanced analysis techniques could potentially be employed to trace and link transactions to specific individuals or entities. The pseudonymous nature of Bitcoin transactions aims to strike a balance between privacy and transparency. Users have the freedom to transact without revealing personal details, but the public and immutable nature of the blockchain ensures transparency and accountability for all transactions. The security of Bitcoin transactions is ensured by the blockchain, which is a decentralized and distributed ledger, and the proof-of-work consensus mechanism. Once a block is added to the blockchain, the information within it is cryptographically secured, and altering it becomes extremely challenging. The distributed nature of the blockchain across numerous nodes globally makes it resistant to hacking or malicious attacks. Proof of work requires miners to expend significant computational power to validate transactions and secure the network. This resource-intensive process adds an extra layer of security, making it economically unfeasible for attackers to compromise the integrity of the blockchain. Bitcoin's value is known for its volatility, which is influenced by various factors. Market demand, investor sentiment, regulatory developments, macroeconomic trends, and adoption rates all contribute to the price fluctuations. The limited supply of Bitcoins, coupled with growing interest and speculation, can lead to significant price swings. While volatility can present opportunities for traders, it also introduces challenges for those seeking a stable medium of exchange. Ongoing developments, increased adoption, and maturation of the cryptocurrency market may contribute to reduced volatility over time as the ecosystem evolves and stabilizes. Bitcoin has gained widespread attention and utility, serving as a store of value with comparisons to digital gold. It is increasingly being accepted as a medium of exchange through payment gateways and merchant adoption. It has potential as a future unit of account, as its global accessibility and technological advancements contribute to its multifaceted role in the financial landscape. Bitcoin has also paved the way for the development of thousands of other cryptocurrencies, collectively known as altcoins. Each of these altcoins possesses distinctive features and serves specific use cases, contributing to the dynamic and innovative ecosystem that has emerged within the realm of decentralized digital currencies. However, it's important to note that the cryptocurrency market can be speculative and is subject to regulatory developments and technological advancements. Despite its growing acceptance, Bitcoin remains a controversial asset. Regulatory uncertainties, concerns about its environmental impact due to energy-intensive mining, and its association with illegal activities contribute to the ongoing debates. Additionally, the decentralized and pseudonymous nature of Bitcoin transactions has led to discussions about its potential use in money laundering and other illicit transactions. The interest from financial giants like BlackRock and Fidelity is seen as a positive for the industry. The regulatory climate should become clearer over the next few years. Please note that this detailed video about Bitcoin is for educational purposes only, and is not a recommendation to buy or trade in Bitcoins. If you found this video valuable, please give it a thumbs up and subscribe to my channel for more cryptocurrency content. One more point. Remember to keep your cryptocurrencies secure if you do own any. There are valuable links in the description to crypto-related products you wish to have a look at. Thank you for watching and see you in the next one.